cheap.
All right, traders. Oops, sorry about that. Turn the volume off on the laptop. Good morning, good evening, good afternoon. Welcome back to the live trading room. How's everyone doing today? As always, give me a yeah if you can see my voice, hear my screen. And we had some difficulties on the YouTube stream yesterday, but it looks like things are working loud and clear today, which is good. I don't know why it does that, but technology is technology. But welcome back to the live trading room. Happy as always to have you. We had some really good discussions yesterday. So if you were someone that wasn't here live, or maybe you missed a portion of the session, make sure you go back and watch the recording. Some extremely good discussions about time frames, the differences between higher and lower time frames. Maybe we should call them liar time frames, since the signals are less relevant. Good discussion on writing a trading plan. And we had one more that I forgot about earlier in the session. We had a good discussion about just entry tactics and rules-based trading as well. So make sure you watch that recording. As always, or what we've recently doing here in 2022, the first trading idea of the day is going to be live streamed to both TradingView and YouTube. We're calling it the trade of the day. It isn't necessarily the quote unquote top trading idea of the day, but one that I think is educational and fun to talk about. Some of the trading ideas are kind of boring. They are what they are, and we can discuss them in 1 minute. And I don't think that's very helpful from an educational purpose. So we try to give you guys something that gets the discussion going. Push Ezekiel. Is Ezekiel saying anything? For some reason, I get the blue circle on the screen. Yes, I am talking. Any issues here on the tier 1 live room? You guys hear me okay? Nope. Yep. So hopefully, yeah, try refreshing. We'll get that going. So little news coming out today. We know it is a non-farm payroll week, which means Friday is the big day, the non-farm payrolls. And leading up to Friday, we have these little minor news events. Today we have two, not necessarily minor, but minor in comparison to the non-farms. We got the ADP non-farm employment change coming out at 8:15. That is looked at as typically being the precursors to non-farms. Again, is that always the case? Not really, but the market looks at this as being, hey, what we see based off this event will give us a good idea of what's going to happen on Friday. So there is some value to it. We've got GDP coming out for the dollar as well at 8:30. We've got an FOM member speaking later, which could be important. We've seen the market move yesterday after I think an ECB member came out and said some stuff about interest rates. And of course, we've got the war in Ukraine going on as well. And we had a good conversation about it yesterday as well. We were looking at the dollar index for our trade of the day, and things started moving in, out of nowhere. And a lot of our traders were asking, hey, why are we moving? We're not during that period of time where any significant news is coming out. And you got to remember that although kind of we become numb to it now, that war is still going on. It still exists, and it still is having an effect on the market. So when we get different news events like, hey, peace talks, moving towards peace. Oh, just kidding. Just a trick for Russia to move troops around. The market is going to react off of those, and probably more so now than anything else in the last couple of weeks, because now it's the market's trying to get the idea of, hey, is this thing over? Is it still going on? How am I going to reposition myself once we are kind of, quote, in a safer state? So I would say keep an eye on that. There's nothing you can really do about that. By the time you hear about it, the markets would have already moved off of it. But if you do get any kind of weird sporadic movement in the market, that's the first feed I would check. So let's hop into our trade of the day. Yesterday, we did the dollar index. Today, we're going to go over to some crypto, right? I know it's crazy. Crypto. We're going to go over to Ethereum, and we are going to look at a price action trading opportunity here. So as always, for me at least, I always like to start on the daily chart. I go daily, 4 hour, 1 hour. The daily is the chart where I start, and I'd like to get what I call a lay of the land. I like to look at what's going on, what's happening. And we see, Cody says, oh, just keep going up to those highs. Well, that's actually my prediction, Cody. I've got a bullish prediction on here, maybe, depending on what happens. But let's identify what's going on here, right? So price action recently, and by recently I mean since basically 2022, has been in consolidation. Would you guys say? We've kind of bounced up or bounced down, bounced up, bounced down, bounced up, bounced down, bounced up. You can see a few advanced pattern formations in here as well. Even a potential butterfly, which actually may come in handy later for target. So let's keep that. Bobby, you're your butterfly Bobby. Let's keep that in the back of your mind. But we are currently trading, right? Again, my favorite tool, horizontal tool. We are currently trading at a previous level of structure. So I've got two things that I want to take a look at today. One's going to be a bullish opportunity if we violate structure. One's going to be a bearish opportunity if we hold structure. And again, that's the type of trader I am. I am a mercenary. I'm not an investor in this stuff, so I don't really care if it goes up or down. I want to look for opportunities in either direction. What is the path of least resistance? What will allow me to most efficiently and effectively make profit? So something that I want to pay attention to is, or a question I want to ask myself is, okay, so if I'm planning for a potential continuation bullishly, the question I want to ask myself is, if we continue bullish, and by ask myself, I'm going to ask you guys for your input. If we continue bullish, where is the next stopping point if we were to go higher? Shoot me some ideas. If we were to go higher, where are we likely to go? And this is a little bit of a tricky one. I'm going to use a tool that Rudy used yesterday. If you guys remember when we did that analysis on, I think it was Euro Aussie with Rudy. Cody says 39s. Close enough right there, right? These highs right here. Or she says the same, 39s. Jane says kill zone. That's not an answer, Jane. That's a cop-out answer. You got to tell me what the kill zone is. There's lots of kill zones on here. Don't give me the coaching answer. Justin on YouTube says 3760s. 37. My eyes are so bad. Years and years of killing them. I'll tell you what. One bit of advice. I'm not going to go off on too much of a rant. It's too early for that. But if there is, I often said I don't have any. You said 3760s, Justin? Yeah, 3760s. I don't have a lot of regrets in my trading. I believe that everything happens for a reason, and it's all part of the learning curve. If I didn't struggle and suck as much as I did at the beginning of my trading career, I wouldn't be as good as I am now because I wouldn't have learned those lessons. But the one thing I would change, guys, I would have protected my eyes better. My eyes becoming a professional trader, or even before I was a professional trader, the journey of becoming a professional trader destroyed my eyes. Never had an office job, any of that stuff. Well, I had an office job, but never like a long-term office job. But staring at screens, and at the time, white screens, because that's what was in, like white charts, melted my eyes. Staring at all these screens for a very long time, and I'm talking when I was in the learning process, I was putting in like 14-hour days, 12, 14-hour days of just like back testing and learning. So like 14 hours straight, I was a machine. Destroyed my eyes. No one uses the white screen anymore. Yeah, I actually like the white screens. I like the clean look of it. I think it's sharp. The candles pop. I tried to put one on the other day. It's just too bright. I can't do it. But yeah, it melted my eyes. So I wish I would have done two things. I wish I would have learned about blue light filters for my monitors and blue light filters for my glasses a lot earlier. Because I can tell you what, ever since I started doing, I used the, what's it called? I don't know if you guys can see it. This thing, Flux, where it changes the blue light throughout the day. So you can see right now, this is, even though it's 7 o'clock in the morning, it's like, I'm up for whatever hour. So I'm 91% like regular light, but like in the morning, it starts off duller, at night ends up duller. So it doesn't mess up my sleeping patterns. Doing that and adding blue light filters to my glasses. As soon as I did that, man, my eyes haven't gotten worse for 5 years. So my bit of advice, if you're an eye person. Now, The stress of trading and the receding hairline, can't help you with that. I can't help you with that. Obvious by my videos. I got nothing for you on that. You got to deal with that on your own. Go yell at your mom and dad for genetics. But the eyes I can help you with. I can't help you with the hair, man. You just got to let it go. Looking like an emoji. That's what I look like right now. Push that emoji. All right. So we got someone on TradingView saying 3760s as well. So yeah, good level. So the area, the two levels that stood out for me, getting back into serious business as we sometimes do it here in the live room, is one, this spike, right? And two, and this is probably what James was referring to as well, this level right here. Now, there's a lot more structure at this level than this spike. The spike is a little bit of an anomaly. So I tend to venture towards this level as being our next projection point. Something else we can use too is, again, if we use our, sorry about the, hold on. They're laughing at me over on YouTube because of the hair joke. If I use my volume, horizontal volume indicator here, again, it's going to allow us to see where those massive volume spikes are, right? And you can see currently at one right now, right? And again, this is no surprise. If you know how to read support and resistance, you should be able to tell where the bulk of the volume is. We have a gap, and then we start accelerating again or increasing again once we get to that 37, that 36 level, and then increasing to our peak, excuse me, up here around 40s, right? So if you're looking for a good place to take targets, again, conservatively, probably starting about right here at these lows. Aggressively, I got to get a drink real quick, right here at this level. Now, is there anything else we can do to kind of build confluence to kind of pinpoint where this projection is going to be at? Type it in. Anything else we can use on our chart? I'm going to get a drink real quick. Here we go. Still hanging in there. Still got sick people all over the house. I'm the only one that's surviving. Edgar says 14 hours. Sheesh. Yeah. Well, remember, Edgar, and you may not know my story. So when I finally started taking my trading like super seriously, I had quit my jobs. I quit all my jobs to become a professional trader. So I had nothing but time on my hand, and there was a massive sense of urgency because I didn't have any income. So I dedicated myself. It was it was like my job. I wake up. And I wasn't really organized at first, but I'd wake up and basically just learn to trade all day, and then go to sleep, and then repeat the next day. Because my philosophy at the time and all of my other successes at life have just come from hard work. So my belief was like, hey, if you work hard enough for a long amount of time, you'll get successful. So I was just gonna, hey, if I can work 14 hours a day, that's 2 times better than the person that's doing 7 times a day. So I just want to put in as many hours as I can. The thing I didn't learn at the time, or didn't know at the time, is that I wasn't really learning or practicing the right stuff. So that was the problem. I didn't know what was right, what was wrong. I was just, every random thing on the internet I would try. So part of that equation is working extremely hard over a long period of time, but practicing doing the right things. That was the part I was missing. But once I got coaching and mentorship, then it started to pop, because I still had that same work ethic. I still had that same desire. But now I was pointed in the right direction instead of kind of like, going in a circle or walking into a wall. But yeah, 14-hour days, man, wasn't fun. Destroyed a lot of relationships during that time. But yeah, let's throw on some fibs. Let's take a Fibonacci retracement from our swing high to our swing low, right? Nothing at that high volume level, but we do have a 618 Fibonacci retracement right here at 38.3s. We could take a fib inversion, right? We can't take an extension yet because we don't have a retracement, so we don't know when this move is going to end. But we can take an inversion from our previous move down here. I guess we actually take one from here if we want. That would be the move to take as well. So we can do that. It's going to be about the same, but a fib inversion. You see a 1618 up there. We'll probably get a 1618 right at that 618 if we take this one, fib extension. Yep. So you can see we're adding some extra tools to our arsenal. We can still keep that bigger zone as our kill zone, but also if you wanted to kind of Give me a second. Sorry, I'm dying with the throat today. If we wanted to kind of shrink this up some, we can pinpoint the zone right up here around this 618, these 1618s and that high volume spike. And that goes essentially around 138s, 137 highs, right? So you guys are very good at picking that level. And again, where are you picking this level isn't really important. This is going to come down to your conservative or aggressive nature. The more conservative person is going to take the lowest level. The more aggressive person may take the higher level. The person in the middle will probably take somewhere in the middle. Or says we can plot a potential 3 drives. Kinda. I'd want to see a little bit more. Or see, I'm not comfortable drawing a Fibonacci to this level yet, because I don't know if that's where the extension is going to end. So we certainly could. Me personally, I don't want to do it because I know that for me, it's not going to be too relevant until we start that retracement. So I don't like getting too ahead of things, if that makes sense. It's the same thing, kind of like I get confused by having a lot of stuff on my chart. So if I have another thing on my chart and then I kind of forget where that was drawn because I got 80 other fibs, then it confuses me and it may be something that is not relevant yet that is on there. So you can certainly do it. For my personal purposes, I just like to wait until a little bit later to do it. But yeah, you can certainly do that as well. Bobby said we can use the decompletion of the butterfly as well. Yep. So we can take one more fib you can use the 127, but if you're using an inversion for a butterfly pattern. If this is confusing, I apologize. Just ask questions and I'll answer for you. But a butterfly pattern, if you're using an inversion, is going to look like this: X to A to B, B to C, and C to D right at this 127 in here, which once again puts you right in that zone. So a good example of using a potential advanced pattern formation, the decompletion, as also the projection point of, hey, where is price likely to go to? And as you mentioned earlier, by the way, this butterfly, pretty decent butterfly to take. Why? Because you have a nice structure level to hide stops above. So doing this analysis, doing different forms of analysis, using different technical tools, putting them all together, basically we've built confluence in this zone. We've narrowed down our zone of where we think price is going to go, right? And now because we can see that, hey, we do think price has room to move higher, now we can start setting up our trades. We're going to go down to the lower time frame for that. But real quick, let me answer a question here on the YouTube. He says, 2-part question. Oh, why is my font so small? Gosh, I can't see. 2-part question. Would you say reading Forex books helped you become more successful? And that's amazing. What's your live stream schedule like? Definitely want to hop on every Tuesday, Wednesday, and Thursday. 7:30 a.m. New York time, traded today. First trade we look at in the New York live trading room. The actual live stream goes on for another few hours. If you want to access that, head over to www.tier1trading.com. Sign up for a 14-day risk-free trial membership. You can join us in the London live room and in the New York live room. So you can get lots of live rooms and a lot more, the training courses, software, all that fun stuff as part of your 14-day trial. So you can do that as well, Edgar. Would I say that Forex books helped me become a successful trader? I want to share this question for you guys in well, I guess anyone out there as well. You can feel free to lend your opinion. Yes, but probably not the books you thought. So I'm actually going to say, taking your question word for word, no. I don't think any Forex books have helped. I think the books that have been the most valuable for me have been the books on the most important aspect of successful trading, which is trading psychology. So the most valuable books in my arsenal are books like Trading in the Zone, books like One Good Trade, The Disciplined Trader, Come Into My Trading Room, The Daily Trading Coach, the books that don't actually talk about the technicals, rather the books that talk about psychology. Market Wizards, leaving that one out. You guys can add any if you want. Those have been the most valuable books for me. Most of the technical books that I read prior to becoming successful did not help at all. Some of them are just really bad. They just pinpoint. Some of them just teach you stuff that doesn't actually work, right? They make up stuff and then they show you picture perfect examples and be like, oh, see, whenever this happens, and it's complete garbage, right? Hot, flaming garbage. And they trick you because you don't know any better. Some of them are like that, some of the bad ones. Some of them are good, but in my opinion, I think it's extremely difficult, if not impossible, to learn technical analysis by strictly a book. I think there needs to be live market application, because it's so easy to look at and study off of a perfect book example, but the real markets aren't that way. But I can tell you that I've learned a lot I've enjoyed a lot of classic technical books after I developed a good foundation of knowledge. So after I had a good foundation of how price action moves, simple patterns, all that fun stuff, then going back to books like The Art and Science of Technical Analysis. I forgot the one by Multiple Time Frame Analysis. What's the name of that book? Gosh, give me a second. I'll name a few. Technical Analysis Using Multiple Time Frames, if you guys can still hear me. Street Smarts was a fun one. Didn't really learn much from that, but that's a good reference I use. What's the Japanese Candlesticks? Steve Neeson. Leaving out a classic one. Where's the big one? There's a classic one I forgot. It's like Stock Market Analysis and something. But yeah, so most of the technical books that I read that were helpful, I read them after I already had a foundation of knowledge, because then it was easy for me to understand what they were actually talking about, and also kind of replicate what they were teaching and view it in the live markets. Diary of a Commodities Trader was a good one too, by Peter Brand, a 30-day diary of trade by trades, which is pretty cool. Underestimated book. No one ever talks about that book. That's a really good book. I'm a Peter Brand fan. So stuff like that. People in the live room are saying, or she said reminiscences of a stock operator. Amari says Super Trader is a good one. Or she says Pitbull. So some other good choices for you. Yeah, I got so many books, man. I got this big garage, and there's some Lambos in that garage, but those Lambos aren't the most important thing in that garage. It's the books, all of the books in the garage. That's where the real money is at. Shout out to Ty Lopez, right? But yeah, the Bible Candlestick Herd is really good. Phil Gibbs, you haven't read it yet. I haven't heard that one, but yeah. So books are good, but I think it's very hard to learn from books by itself. Honestly, I think it's very hard to learn from training courses. I don't think you can just learn from a training course by yourself. I think it needs to be a combination of, and I just put out a podcast on this. I think it was called Training Courses versus Live Streams. I think it needs to be a combination of learning and then practical application. Learning and practical application. And we were having this conversation with a newer trader on our platform the other day, where I said he came into the live room and he started asking questions. I said I was so proud of him, because this is where you're going to get to practically apply the things you're learning in the courses. It's one thing to see it in a book or see it in a presentation, but to see it in the live markets and see how you apply this stuff is big. I mean, look at the example that we just gave here, right? Everyone knows how to use a Fibonacci, right? But did you know how to use it this way? Did you know how to use it not to just look for entries, but to exits and use harmonic patterns in ways that aren't just trading harmonic patterns, but to project price extensions? Like there's so many different ways you can use this stuff. So good question. All right, so let's go down to our a lower time frame here, a 4 hour. Spending a lot of time here on this. I'm supposed to keep this little live stream like 10 minutes. And we can see that price action. We have our zone up here. We can see that price action is consolidating, right? So we're going to kind of skip to this real quick. And this is where our two options are at. So right now, I have zero interest in buying or selling, right? There is nothing that the market has shown me that says we're still at that level of structure from the daily. There's not much that says, hey, we're likely to go higher or lower. But what I like to do is I like to bracket. I do this in my normal pre-market analysis in general structure, but in this specific pattern as well. I like to bracket two areas. I like to bracket the high. I like to bracket to low. And these are going to be my decision points, right? So right now, the market consolidates. I don't see any reason to think we're going to go higher versus lower or lower versus higher, right? This is the market kind of making up its mind. This is the battle between buyers and sellers trying to decide, hey, supply demand, who's going to win, right? What I'm looking for is proof, or as much as we can get as far as proof goes for a winner. So if we break and close to the upside here, is that a positive sign for buyers or sellers? Hey, thanks for joining, Legacy. Wish I knew your real name, but thank you. Yeah, positive sign for buyers. So if we break to the upside, then I'm looking for buying opportunities. And again, my preferred entry is the pullback. So I'll wait for another pullback and look to get long, but you can certainly buy on a breakout if you want. If we were instead to break out to the downside, is that a positive sign for buyers or sellers? Sellers, right? Then we got to go about the process of predicting if we go down, where are we likely to go down to? Here's our next relevant level of structure right here, right? That's going to be a little bit clearer on the hourly. So that's the next part of the process. There is some structure here as well, but I think this is the one that's more important to me. This is part of the process. We do our analysis. We kind of predict if this, then that. If we go this way, then we can go here. If we go that way, then we can go there. And then our job as traders after that is to wait. We wait. And again, predictive in our analysis, reactive in our execution. In our analysis, we predict. We run through the scenarios in our head, right? Dr. Strange. We run through those scenarios. If we were to do this, then what does the follow through look like? But we don't just buy right away because there's no reason to buy right now. Sometimes there will be. We don't sell right away because right now there's no reason to sell. We wait until the market gives us a clue, until it gives us a hint that the tide is turning. And there are many hints you can use depending on your personal preference. And then after we have that hint that shows us the probabilities are likely in our favor, then we wait for our entry opportunity. And if we get our entry opportunity, then we pounce. Then we go to the next pair, chart, whatever it is, and we do it all again. And that is the daily process. And the cool thing is, for many of you guys, I know this is a lot, and I apologize because it's probably overwhelming if you're new. It seems like we did a lot on this chart. But honestly, we only did a handful of things, right? We identified structure, we identified a harmonic pattern, and we used Fibonacci's. We did 3 things. We only used 3 tools. We didn't mention RSI. I guess we did look at volume as well. We used 4. But once you know how to trade and once you get in a routine, you know what you use in your analysis, you know how to use it, and you can use things in multiple ways. The process is pretty robotic. So for a newer trader, it may seem like, man, this was a whirlwind, a tornado of just analysis where he was just throwing on fibs and doing this and doing that, and the chart got all sloppy. But it's really going through a process. And if you remember, when I asked the live roomers, I said, what can we use to build confluence? They said fibs. And then it was the straight fib extension, fib retracement, fib inversion, right? Those are the three ways we can use it. Bobby said, hey, draw a fib for the butterfly. So it's the same tool, just used in different ways. Look at structure, look at volume, right? So it's not as confusing once you have a process of how to do it. And that comes obviously with learning, but it also comes with reps. And a couple of weeks ago, I did a video on the CTS training, right? Combined technical score. And that's the beauty of that, where you just go through that checklist over and over again. And I always say this, the beauty of the CTS system isn't necessarily the fact that you're quantifying your trading. It's the fact that you're developing a routine, a process of what you look at every single time. Look at this. All right. Look at that. Okay. Peek at this. Okay. Where's that at? Right. And eventually that becomes your trading routine. That becomes your trading habit. And for someone like me, who I haven't technically used the CTS system in probably like 10 years. Nah, not 10 years. Probably like 8 years. I still go through it in my head every time I look at a chart. And if you pay attention to how I do analysis, right? I do analysis the same way each time. I always start with this. I always start with that. Then I look at that because it's ingrained in me, that routine, that ritual. So cool stuff. Any questions on Ethereum before I let you guys on the live stream go? Do me a favor, hit that like button. If you felt like you got something from today's session, hit that like button. Show me some love. Please don't make me beg. Live rumors, if you have some place you want to go to next. I know I missed a few comments, so I'll get to it. Type it in. We can head there next. I got a few things on my radar. Nothing that is too urgent. Maybe Euro Yen cipher. Euro Yen's been pattern after pattern after pattern lately. Hit the bat yesterday. Hit a nice butterfly this morning, I believe. And now maybe putting in a cipher. Check this bad boy out, man. Yesterday's bat. These things come in bunches. Yesterday's bat was right here. This morning's butterfly. I don't trade butterfly, so I didn't catch this. Right there. And then next putting in a cipher, right? Crazy, right? Crazy. Those things come in bunches, man. They come in bunches, right? Consolidation. They happen after one after another. Then the market trends. You don't get any for a while. But awesome. So thank you guys for enjoying the session. I'll see you guys tomorrow on the live stream, same time, same place. Fingers crossed that the YouTube version works. Again, hit that like button on your way out. If you have any comments, leave it below. I will read through and answer them. Today's my busy day, but I promise I'll get to them at some point. Thank you as well, TradingView. Appreciate the love. Don't be shy.